Bloomberg Audio Studios.
Podcasts, radio, news.
Single best idea, the last one of the year, we will revisit in January to reframe what seems to be an exceptional 2025. I just mentioned to Paul Sweeney, I've never seen a holiday season with less focus on how stores are doing. I don't know why that is. Maybe we'll pick up the pieces in January. One thing I heard 2 or 3 days ago, which I do agree with, and I think it's important, we're setting ourselves up for an exceptionally important earnings season. Look for that January 25-ish. I think Apple's January 30th and into early February with the frenzy. JP Morgan, I'm assuming, is, I don't have it in front of me, January 15th, 17th, whatever. But the earnings season, I think, this year for the fourth quarter will really be something. On this final single best idea for the year, on what I watch most closely, which is the inflation-adjusted rate TIPS piece, 10-year. Here's Bret Barker of TCW on the left coast. Bret Barker on higher real rates.
This is really reminiscent of the fall of 2023. If you remember back then, there was a lot of talk of risk premium, fiscal largesse, right? And we had real rates in the 30-year sector close to 260. We're not too far from there now, and the 10-year rates within 20 basis points where we were there. So I think we look at that, I think real rates are restricted. So for us, I think you're getting close to these points. I think people are talking about how high we can go. It's like, well, I think at this point in time, you're basically back to almost pre-GFC levels on real rates. And we don't think the economy is the same as it was in pre-GFC. So we think these are pretty restrictive real rates.
That's a really important statement. Bret Barker, TCW here. And this restrictive or accommodative goes to the heart of the matter. That's the debate that's engaged in economics, finance, investment, and indeed redounding over to international relations as well. And the real rate, but for those of you that don't follow this, from a 1.90-ish out to 2.25-ish is a really significant move. TCW cautious there as well. On a Christmas Eve, Benjamin Laidler, then at HSBC, this is 2018, 12/24/18. Ben Laidler said, get on board stocks. It's one of the great bull market calls of all time. It's been a 6-year run, ebb and flow here, COVID. I looked in 23, maybe we had a drawdown of 7 or 8%. Whatever. The answer is it's been a great bull market, and congratulations to strategists that have led on that. One who's led is from OPCO. His name is John Stoltzfus. He writes brilliant, short, accessible, non-mathy notes, and they talk about participating in the market and participating with an optimism that corporations will adapt. He has a stunning call out to SPX 7,000-ish. That gets you out near Dow 49,000, Dow 50,000, maybe with some optimism and a cup of eggnog out to 51,000 on the Dow. John Stoltzfus of OPCO, the view forward.
First thing I've got to say that I think the bears got it wrong and that they thought the Fed was going to blow up the economy, push us into a recession with the rate hike cycle that they started in March 22. Instead, the Fed was very sensitive in exercising its dual mandate. Then the bears really bid wrong on the consumer. We always say don't bet against the American consumer. The consumer discretionary, by the way, is the best performing S&P 500 index since August 5th, which was the summer low, that's when the market had that pullback of around 8%.
Paul Sweeney told me to buy Walmart. I didn't. I guess that's consumer discretionary. John Stoltzfus of OPCO. On your commute across the nation on Apple CarPlay, worldwide on Apple CarPlay and Android Auto, on SiriusXM Channel 121, and from Nathan Hager's Washington and 99.1 FM to Mount Katahdin and Boston and 92.9. And on YouTube, all I can say is subscribe to Bloomberg Podcasts. It is our future and my future here at Bloomberg Surveillance. And, of course, this podcast, find it at YouTube Podcasts. This is Single Best Idea.